The broadcast is now starting. All attendees are in listen-only mode.
Hey everybody, good morning. It's Mike from Orderflows, and welcome to today's presentation. Today is Thursday, June 30th. It's going to be an interesting day in the markets. It's not only month end but quarter end, and it's always a busy time of the year whenever you have a month end and a quarter end. So what I'm going to be talking about today is trading with order flow, how to spot opportunities in the market. And, that's what trading really is. It's all about opportunities. And if, if the thing, I was watching recently, you had the Champions League final and, it was Liverpool, Real Madrid. And I just remember the commentators saying, the way Real Madrid plays is, they just look for that moment, that opportunity to score, and that's what happened. If you watch the game, sorry to, your Liverpool fans, but, it was just, normal game going on. And then it's just for that one split moment that Real Madrid, got the ball and was able to score. And it's just like that in trading, right? You see a lot of trading going on back and forth, and it's just your normal flow of traders in their activity, transferring risk. That's what the markets exist, is to transfer risk from one party to another. And it's just that one moment where things just really make sense, that you see on an order flow chart, that you're like, yeah, I get it now. I understand what, all this talk is about order flow. So let me get my slides here going. What's going on? Trading is about spotting opportunities in the market and capitalizing them, right? And one of the best ways to find those opportunities is to trade using the order flow. Okay, so like for example, today in gold, all right, you had that big run up this morning. This is just this morning at 7:30, right? You had that big run up. We hit that high around 8 o'clock, and then we starting our descent back down. And if you're just looking at a normal bar chart like this, you don't know, are we going higher? Are we going lower? But when you're looking at the order flow, and I'm going to show you the chart later, when you see this bar forming here, you can say, yeah, you know what? We're coming off this high. We're not going to make this new high and continue on to new all-time high, or not all-time high, but new highs for the day. And it's just by understanding the order flow that the markets are going to make sense to you. And order flow trading simply refers to the trading based on the orders that are coming into the market and trading, right? People always talk about, oh, you got to look at a dome, you got to look at the, the market depth, you got to look at, a book map, a heat map, and while those tools are useful in their own right, you're not looking at actual trades that happened in the market, right? You're just looking at people's intentions. People want to sell at, a certain price or buy at a certain price, but if the market's trading nowhere near there, okay, what good is that information going to do for you right now, right? You got to trade in the present. So by keeping an eye on the order flow, you can get a feel where the market is going and spot trading opportunities that you might otherwise have missed. And, sort of the way I like to describe it is, people, when they climb a mountain, right, that they've never climbed before, doesn't mean they can't climb it, right? It looks daunting at first, but once they start getting into it, start moving, going up, then they sense of, it's better for me to go this way or better for me to go that way. And it's the same thing with order flow. You're going to find ways to analyze the market that it's just going to make perfect sense. This is the route for me to go up this mountain, so to speak. Now, today we'll be talking about are sort of three keys about order flow, how order flow trading can give you an edge in the markets, right? We all want an edge in the markets. That's what everyone says. To be successful, you need an edge. And I'm going to show you how order flow can give you that edge in the markets. I'm going to talk about the differences between order flow trading and traditional trading. And I'm going to talk about, why you should care about the order flow footprint chart. There's big differences between order flow trading and traditional trading. Most people don't realize it. They think trading is trading. No, there's all these, basically, when you're trading off of, traditional technical analysis, you're basing your decisions based on past data, right, as opposed to current data. And that matters, right? There's a big difference in that. But, before I begin, just, some of you guys might be new to who I am and, listening to me, why you should listen to me is, I have experience trading at a very high level, right? I've started my career back in the 90s on the CME trading floor with Dean Witter. It's a brokerage firm back in the US back in it got sold in the 90s. But it was a big powerhouse firm, and I started on the trading floor there, and I left the floor to join their off the floor trading desk when electronic trading started taking off. Unfortunately, electronic trading in those days happened after trading hours, so I literally worked the graveyard shift for many years, right? Because to trade electronically, those are the markets that traded technically overnight. I'd go in the office at 10 p.m. and leave there at just after 8:30 after the S&Ps opened on the floor. But it was a great experience because it got me exposed to other markets, and more importantly, I was sort of on the cusp of electronic trading, right? And now everything's electronic. After that, I joined EDF Man, the big English trading company. Has been around for over 250 years on their macro futures trading desk. Then I joined Commerzbank, the big German bank. I joined it in Chicago. I was a licensed Eurex trader there for several years. Then, after 9/11, I took some time off, traveled around the world for about half a year. Then I joined Cargill, the big U.S. trading commodity firm. I head up their futures trading desk in Chicago, and I even set up a desk for them in Singapore when the exchange was closing down. After that, I joined JP Morgan in Singapore. I spent 8 years as vice president of futures trading. So, I've been exposed to futures trading basically since the 90s, right? So, what I'm talking about is what helped me in my career to be successful, right? I mean, it's not, I watched a bunch of videos for a year on YouTube and, opened up a $1,000 account at some discount brokerage. No, I was trading at these levels. These are actually trading jobs. And what you're going to learn today is, based off of my years of experience. And in 2015, I started a company called Orderflows.com, which is a software company. And I created my own software for analyzing order flow because I was not satisfied with what was available on the market for traders because I was still trading. I was trading for myself at this point. And I know that software can do a lot, right? Rather than just have a basic charting program, I wanted to do analysis for me rather than just plotting the data. And the reason why I talk about that is because I do want you to understand that the charts you're going to see in this presentation are generated from my software. Okay. But what I'm talking about are things that you can use. And if you already have a footprint chart, an order flow chart, you can take the information and apply it to your trading right now if you want. But hopefully by the end, you're going to see how easily and quickly you can apply order flow analysis to your trading to make better, more informed trades. And, I love the positive feedback I get from customers, right? It's, people say, the softwares helps them see what's really happening in the market, right? And that's really what you want to do, right? You want to be able to see what's happening in the market as opposed to just having the data in front of you. Having the data in front of you is one thing. You have to know how to analyze it. Now, before I jump in, just a brief disclaimer. We're all adults here. We understand that, trading does involve risk, and only risk capital should be used for trading. And only those with sufficient risk capital should consider trading. Okay, so when it comes to order flow, sometimes you have to shift your mind, right? Because you're always going to be looking for opportunity. People look at the markets, and especially now, with Bitcoin down, stocks down, everyone's talking about, oh, there's blood in the streets. You got to be just buy everything. No, you really what you want to do is you want to look for that opportunity in the market, right? So even though it's crisis mode, everything's selling off. It's the end of the world. We're in a recession. No, markets have been around for 150 years, longer than that actually. There's been recessions, there's been market crashes, and really what you're looking for is the opportunity within those. And with the order flow, it's really taking it a step deeper, and you're really looking for opportunity on the day time frame. Order flow is best used for intraday trading. So first I'll talk about is how order flow can give you an edge in the markets, right? Order flow trading is a trading strategy that uses market data to identify trading opportunities. So by understanding how orders are placed and executed, right? It's not just, a trade happened. You want to know how it happened. Okay. Was somebody aggressive there? When the order was placed, was the trader being aggressive or was he being passive? That matters. Traders can gain an edge over other market participants by knowing this information, and it's all there for everybody. You don't need level 2 data. Just the level 1 data, your normal data feed will suffice. Order flow trading requires an understanding of market microstructure, but the rewards can be substantial. Now, don't get scared away when I say, oh, you need to know market microstructure. No, you just need to understand how the buying and selling is taking place. And this is ultra bonds, right? Yesterday, if you understood what was happening in the order flow, you'd know that what's happening down here is quite bullish, right? We're at our low of the day. That's what this red line is. I like to plot the days open, high, low, close. So I know where we are trading relative to the high or the low, because if we're at a low, it could be a great buying opportunity, right? Everybody always says buy low, sell high, right? So if we're trading near the low and I see stuff that's bullish in this order flow, then it's going to give me an opportunity to catch this move here. It all started down here in the order flow, right? This market sold off, stopped here, and then got bullish, and the market had a huge rally. This is intraday trading, 149.24 all the way up to basically 151.20. This 24 is up here. That's over a $2,000 move just in, from what, 820 to basically 1020, a two-hour window. Now, granted, not every day you're going to have gigantic moves like that. Now, every little edge is going to give you an opportunity, and it's going to make a big difference, right? Just having a little tiny edge, seeing something that other traders aren't seeing in the market, right? And that's where order flow comes in, right? By understanding order flow, you can be able to anticipate price movements and make trades accordingly, right? Back to our ultra bonds yesterday, right? You notice, right? Bullish order flow down here on the footprint chart. I showed you that. Market went up, pulled back here. Okay, why? Well, why did it stop there? If you're watching the order flow, you can see what's happening here already, right? We're starting to come back down, and then you're starting to see bullish signs in the order flow. Don't worry, I'm going to explain what, all this means in a minute, but, I want you to understand how a order flow can give you that edge, right? Because if you're watching the order flow, you can see, this bar is very bullish, this bar is very bullish. Okay, people are going to say, for example, this bar here, right? Oh, it's got negative delta, Mike. It's got, because what I'm going to talk about is delta is the net difference between aggressive buyers and aggressive sellers in a bar. So if delta is positive, you have net aggressive buyers. If delta is negative, you have net aggressive sellers. People go, oh, you know what, Mike? It's got negative delta. There's sellers in here. Yeah, there are, but it's being absorbed right here. And if you know there's absorption in the market, basically someone stepping up to the plate, willing to buy everything that people are selling, eventually the selling is going to stop. As long as that person doing that absorption is strong. And it is, right? He absorbed everything. He took all the hits from the sellers till the sellers had no more to sell to him. And then the market went up, right? That's what you're looking for in the order flow, signs like that. So first thing I'll talk about just really quick is sort of, what I call the building blocks of order flow. There's delta, imbalances, and point of control. And delta is, again, it's the net difference between aggressive buyers and aggressive sellers in a bar. People think that, for every buyer, there's a seller. Well, yeah, there is, but you have aggressive buyers, you have aggressive sellers, you have passive buyers, you have passive sellers. And the best way to describe it is, if you want to get a trade done, you're going to be aggressive, right? You're going to trade at the market. Now, it doesn't necessarily have to be at the market. You just be lifting the offer, right? You're buying the current offer, okay, or selling into the bid. That is the aggressive activity. If you're a passive buyer or a passive seller, passive buyer works a bid, passive seller works an offer. Doesn't mean they're going to transact, right? I mean, you could be sitting on a bid and not get anything, right? But if you're an aggressive buyer, you want to get done, you're going to lift the offer. You're going to basically pay market price, which is whatever it's currently on offer for. And so the net difference between those aggressive buyers and aggressive sellers in a bar is the delta. And the delta, every bar is going to have a delta. It's either going to be positive or negative. There's times where delta does come to zero on a bar, like the bar closes and delta's zero, right? It's just buyers and sellers are evenly matched. And I've done a lot of studies on that, and honestly, there's no magic secret to it. It's just more of a coincidence on that it landed on zero than anything else. Don't say, "Oh, delta zero must mean something." No, I personally I haven't found anything out of it. So generally, as markets rise, you're going to have positive delta, right? You can see it in here, all these green numbers on the bottom. Delta will normally be displayed on the bottom. Some people like to put them above or below the bar, but I just find it easier on the bottom. And as a market is selling off, you got negative delta. Okay, so that's delta really quick. Now, imbalances. Okay, imbalances is when there's more aggressive buying than selling. That would be a buying imbalance. Selling imbalance would be the opposite, more aggressive selling than aggressive buying in the two-way auction. And it's going to be, in the two-way auction. So say the market's 5 bid at 6. If you have a buying imbalance, you'd have like 100 traded at 6 and 10 traded at 5. That would be a buying imbalance. And the selling imbalance would be the opposite. 100 sold at 5, only 10 bought at 6. And generally, as markets are moving directionally, you're going to see imbalances. Okay. And, generally, as markets are moving down, like here, you're seeing the selling imbalances, right? You can see these red numbers in a bar. These are selling imbalances. Then as the market starts moving up, it's dominated mostly by buying imbalances, right? Easy stuff, right? There's nothing complicated about it. You don't have to do any fancy math. Um, you don't have to use indicators that you don't have no idea. Oh, I use people use these indicators. They have no idea the calculations that go into it. Okay, well, why are you using it? Well, I don't know. I saw somebody else use it. Why don't you just trade, right? Read what's happening in the market, right? Okay, yeah, I can see that I have aggressive buyers in the two-way auction. What does that mean? Well, it means you have strong buying as opposed to buying and selling that's mixed, right? Bars here, you can see as we're going sideways, you're seeing some bars with both buying and selling imbalances, right? It's a sideways market in that point. People haven't really made up their mind. The market's just going sideways. Now, points of control. Okay, points of control are the price level in a bar with the most volume. And it's at a price level, right? It's not in the two-way auction, right? Which is a bit different than the imbalances. Right? Imbalances occur in a two-way auction. Point of control is the price level in the bar that has the most volume. So what was traded on the bid at that price level and what was traded on the offer in the price level. And where it gets interesting is because every bar has a point of control. Every bar has a point that has the most volume, a price level with the most volume. And oftentimes you see them acting as support when a market is moving up. Right here, you can see we got a point of control. The next bar, where did it come back? Where did it trade to? What's the low of this bar? The previous bar's point of control. What about this bar? The low of this bar's previous bar's point of control. This bar, it's one tick above the point of control. Here, we're just 2 ticks above, 2 ticks above, and then we get 3 point of controls all at the same level, right? So you can see how point of control on a move up is acting as support, just as on a move down here, it's acting roughly as resistance, right? It comes back within a tick here, comes back here, right to the tick. These two are the same level. We're just, a tick or two below this point of control, and then we start going sideways in here. Okay, so that's a rough way to use point of control. I'm going to show you some other ways as we dig deeper. So differences between trading order flow and traditional trading. Now, technical analysis, right? I said focuses on chart patterns and price trends in order to identify trading opportunities. Now, in contrast, order flow analysis looks at the flow of orders that are coming into the market and actually trading in order to gauge the market sentiment. How do you gauge market sentiment? By seeing where the aggression is happening, right? Is it happening as the market is moving up? Is it buying aggression? Yeah, that's what you like to see. As the market is moving down, is there selling imbalances? Is points of controls moving down? Are the deltas negative? You'll be looking at things like that. So as a result, technical analysis is more concerned with historical data, while order flow analysis focuses on the real-time data, right? You got to be trading in the present, not the past, right? We can all look at a chart and say, oh yeah, this was a great buying opportunity, this is a great selling opportunity. But when you're trading, when you're in the heat of the moment and you got to click the buy or sell button, right? You want to be, you're basing your decisions off of how is the market acting right now, not how it acted 2 weeks ago. What's happening right now? So by understanding the order flow of real trades, traders get a better sense of current underlying supply and demand in the market. And really, that's what you're doing. That's the process as a trader, right? You ask yourself a question: what's happening in the market? And then you start to think. And then, oh, okay, I got it. Now I know what to do. Okay. Now, a limitation of technical analysis is that's based on historical data, which may or may not be indicative of future price movements, right? Market conditions change rapidly. What worked in the past may work in the future. And, you know, there's a saying, in the trading world, at least we had it at JP Morgan, people would talk about a move that happened in the past, be like, oh yeah, man lands on moon. That's ancient history. What's happening right now, right? You want to know what's happening right now so you can capitalize on it, right? Things that happened in the past, yeah, okay, it's good to know, but how's that going to help me right now? Oh yeah, I picked the low of the S&P in 2008 at at whatever 600. Okay, great. It's 10 years later. So what? What does that mean? How's that going to help me right now? What's going on right now? So this limitation, right, the relying on historical data means that it does not take into account new information that could impact future price movements, right? Yeah, people draw their charts, draw on their charts rather, draw their trend lines, draw this, draw that, their squiggly lines. But what happens when new information comes to the market, right? That's why looking at the order flow takes into account that new information, right? So if market moving news comes out, this news will not be reflected in past data. Okay, you have to analyze it, right? Because honestly, if you look at past history, if you look at a chart up to a certain time period, right, before a number came out, after that number came out, everything to the left of that, when the number came out, doesn't matter anymore, right? People are trading based off this new information that came out, right? New CPI came out, right? GDP comes out, right? After that, everyone's idea of what's happening in the market is changing. So basing your analysis on, you know, previous information that's useless now, that doesn't matter anymore, how's that going to help you? So that's why technical analysis often gives you false signals in many situations. So this is E-minis yesterday, right? Why did the market stop here, right? Market went up, stopped, right? Then market tried to come back up a couple times and stopped. And obviously, we're 100 points lower right now. If you're looking at the order flow, you can see you have a big seller up here, right? There's several thousand contracts on the offer up here. Basically, it's sitting in the book, it's trading, and you can see how, look at what happened the first time it traded up there, right? It's kind of, people say, is this a triple top? It's 3 bars in a row where you hit the same level. This is a 1 minute chart. First time you trade up there, it trades 1,000, what is that? 1,087 contracts. Can't get through, comes off a little bit. Here comes the second charge. 1,624 contracts, still can't get through it. Okay, people are getting like kind of depressed, they're trying to break it out to the upside, right? I remember seeing yesterday on Twitter, everyone saying, oh, we're going to have a face ripping rally, right? Well, did we? We went up from 38.05 up to 38.40, then it just stalled, right? Because there was a big seller up there, there's big resistance up there. And now you're seeing strong move into it, 1,000, 1,600, third time, 100. What do you think that means, right? People have been trying to break through this level and they can't. And finally, they just give up here. Comes off a little bit, starts coming back up, But as it's coming back up, where's the volume? Trade 17 contracts, 96, 120. Where's the enthusiasm? It's not there. When you're coming up here before, it's trading 600, it's trading 700. Couldn't get through, comes off, starts coming back up, and it's just trading, 17, 90. Forget about it. Stick a fork in it, right? You can even see, well, it came up again here, right? And still came off. These were the second times. The third time it came here, 8 contracts, 34 contracts, 47. What's happening in here? Nothing. Do you see a strong aggressive buying? No, not really. You don't see many buying imbalances. This bar's got 3 here, this one's got 1. Now you're starting to see, as you're starting to fail on these attempts back up, what are you seeing? You're seeing selling imbalances start to come in, selling imbalances start to come in. When earlier there were no selling imbalances. So now, right, you've coming back up, making another run up towards the high of the day. And these moves are just getting weaker and weaker every time they come up here, right? What's Delta telling you? Well, obviously you got the negative Delta here. Here you got some decent Delta, 400, then nothing, 63.34, then another 300. Okay, at 300 Delta, and it's not going higher, but it's a red candle. So what it's telling you, right? You have that positive Delta, but the bar closes down. That's actually a negative sign, because what you have now, you still got absorption happening up here at these lower levels. The high of the day is up here, right? So it's just right off the high of the day. But now I know I've got offers in here, people that are looking to trap those buyers, thinking that this market's going to keep rallying, right? That's why you got the positive Delta 364. It's because you got passive sellers in there willing to step up and absorb all the buying pressure in that market, right? And then you see, again, a little sideways activity. Again, you can see some decent Delta, 500, 300, 200. But as it's going up, right, 500, 300, 200. Do you expect this market to keep going up, right? And it gets up here, then it's negative Delta. When you're going up, right, you want to be going up on stronger Delta. You want the 300, the 200, then the 300, then the 500, not sort of some nice buying coming in here, then lesser, then even lesser, then peaks right here and turns negative. That's not what you like to see on a market that you're expecting to go up. What's point of controls doing? Well, here you can see they're moving lower. You get these two side by side. This one obviously pops up a little bit, and then it just drops back down. So technical analysts will be waiting for a break to sell, right? They'll be drawing their trend line from here. Oh, look at this. It's holding this nicely. And, there's nothing wrong with drawing a trend line from here, connecting these dots here, coming up here. But by the time you sell here, the time to be selling is up here as it's happening, right? You could see what's happening in the order flow to be getting short somewhere up here rather than down here, right? Technical analysts, they're always waiting for confirmation. Oh, we got to break this trend line. You got to do this, got to do that. And oftentimes you're just stuck around waiting for things that never happen. And, I understand the whole concept of having a trading plan, what I'm going to do if the market goes up, market goes down. But really, you need to be trading in the moment, right? If the market is telling you, yeah, you know what, we have our high of the day here, there's big sellers up here, I see buyers being absorbed by passive sellers up in here, I could be looking to get short up here rather than waiting for a break, somewhere down here, another 5-10 points lower, right? Where would you rather be getting short, here at 25 or up here at 35, right? Because if you're getting short here at 25, your stop is still up here around 40. So if you're getting short at 35 with a stop up at 40, you only got 5 points of risk, as opposed to getting short at 25 with a stop up at 40, you're risking 15 points, right? So that's how order flow, knowing where these big trades happened in the past, and that's holding down the market like you saw yesterday, that's a great area to hide behind, because you know that what traded there was important. So that leads us into the next point, why you should care about an order flow footprint chart. Well, if you're trading without an understanding of order flow, you're really trading blind. Now, simply put, an order flow chart shows you who's winning and losing the battle at any given moment, right? You want to know who's in charge of the market. A lot of times it's back and forth, things markets trading back and forth, no real direction. But there are those times where what you see in the market just makes perfect sense, right? That you go, oh yeah, you know what? I get it, right? You can see here, right? This is what is this? This is E-minis yesterday, right? Got this little sell off here, then we got this little rally here. Okay, so as you're coming down, okay, point of control's moving down. That's what you like to see. Volume moving lower, right? Point of control, again, the price level in the bar with the most volume. So if the price level in the bar, it's not just, bars trading lower, but you're seeing the volume in the bar transacting lower and lower. Now people say, well, yeah, obviously if the bar is going down, volume is going down. Okay, yeah. But really what you're seeing is in this bar, where's the heaviest volume appearing? It's appearing towards the bottom. And then in the next bar, okay, it's around the same level. But then the next bar, the heaviest volume is lower. Next bar, heaviest volume is lower. Next bar, heaviest volume is lower. Next bar, heaviest volume is lower. And it gets here. Now you finally got your first green candle. Okay, again, point of control, the volume is still low. Okay, then it jumps up. All right, it's a big flip in terms of volume. Okay, then you got the red candle, then the green candle. It's about the same level, then a little bit higher. 3 little bars here, down, 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 but then higher, 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 higher. Okay, what's delta doing? Well, obviously on your move down, it's negative, right? That you like to see. Then as it's coming down in here, right? This is where it gets interesting. You got your big negative deltas coming in here, minus what is that? 800. This one's minus 1200. This one's minus 900. Okay, market's going down, strong aggressive selling. Yes, that's what you expect to see. Market still goes down, makes a new low, but does it on very small delta, and it's actually positive. It's 15. Okay, so what's that telling you? Well, yeah, we went lower, right? Imagine if you don't even see what happened here on this move back up, but you see that strong selling, very little aggressive selling, net aggressive selling. I don't want to say there's no aggressive selling, but it's deltas, the difference between net aggressive buying and net aggressive selling. So what you've got aggressive selling happening in here, but it's being absorbed by the buyers, right? That's why you don't have a big strong negative delta of minus 1,000. It's just small. It's positive 15, which is kind of neutral. Especially if you're having bars with minus 1,000, minus 800, minus 900, minus 1,000, then you get 15. So the buyers are coming in. People are absorbing the selling that's happening there, right? And then you could just see it flip right here, right? You still have negative delta. It's a green candle, right? It's a sign of absorption because you have passive buyers here on the bid side that are absorbing all that aggressive selling. Not only that, but then in this bar, you got aggressive buying towards the end of the bar. This is a minute-based chart, so early in the bar, it's a strong negative delta, but second half of the bar, it's positive delta in a sense, right? You got the aggressive buying going on in here, right? Because this bar, even though the delta is minus 405, at one point it was minus 800, so it actually gained back 400 in the delta, right? Because it was minus 800 something and it got to just minus 400. So it went from minus 800 to minus 400. So it's actually a small gain. It's hard to see that unless you're looking at the max and min delta. Because people say, well, it's still got a big negative delta. Well, yeah, it's negative, but it wasn't as negative as it was earlier in the bar. Then positive deltas start coming in. Okay, so you could take that, right? You could have a sense of where the market is going. Do you think it's going to go up or it's going to go down, right? You always want to be asking yourself, what can happen next based off of what just happened? This is euro currency. This is this morning. Again, we're sort of going sideways. Then we dip down here, and then we bounce up, right? We just come in, push lower. Then what happens? Right, nice big rally up. And again, watch the point of controls. Are they moving up or are they moving down? This is a simple way to determine a trend. It doesn't take like many bars. if you're starting to see, 3 or 4 bars where points of controls are moving up, yeah, you could say this market's moving up, just as here, right? Okay, yeah, the market's moving down. Then it gets to this point right here where you have selling imbalance, you got this buying imbalance. You basically what you're happening here, right? Trap traders. People love to talk about trap traders, but they never explain it, right? They never say, they'll just pick a point on a chart sometimes. It just looks arbitrary. And, if you're looking at a bar chart and say, well, yeah, you're trap traders there. Well, here you can really see trap traders, right? People selling down in here, right? Selling 123, turned it off or sell 151. So that's about close to 300 contracts that traded here. Aggressive selling mixed with passive selling. Yet we're trading 10 ticks higher. What do you think that means, right? You had big seller right here. Market's not going lower. Okay, well, he's trapped. And you can see how the market reacted to it, right? Obviously, you can see the volume start moving higher as well in each bar. So that's where using a footprint chart is going to help you. Now, you can actually add more forms of order flow analysis to your chart, right? And I talk about the order flows trader software that I developed, and it gives me additional insights into the market. Like now I can see, this bar, I've got a lot of aggressive buying taking place here. This bar, 1, 2, 3 imbalances, right? It's telling me that I have imbalances. They're just spread out in the bar. So imagine, right? I see the market come down into a swing low, and I see multiple buying imbalances. What do you think that means? Well, it means that we hit a swing low. Buyers are attracted to come in, not just buyers, but aggressive buyers are attracted to come into the market, and the market starts moving up, right? 2 bars later, more aggressive buying, right? 3 imbalances here, another 3 imbalances here. Now, digging a little bit deeper, if anybody's ever spent any time with volume profile or market profile, you understand what value areas are. And you could actually plot them on a bar as well. So not only do you see the points of control, which is the volume, but now you can see the value areas in a bar. Are those value areas migrating higher? Well, you know that off of, based off profile analysis, that when you see value areas moving higher, the market is trending up. Just as if you see value areas move lower, the market's trending down. And by looking at it on a bar by bar basis is going to give you an insight, a faster insight into changes in the market, right? You can see here, right? This market, it just flipped on you, right? It looked like it was going lower. But then we see the value areas just within 2, 3 bars are much higher. That's your sign, right? You want to be getting position yourself long. There's a lot of times where it's just mixed, right? It's just value areas are overlapping, like here or here. But when it just comes down, dips down, value area low, prints down there, then the value area prints here at a low, then it comes in higher, 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 higher. Well, yeah, that this market is really getting ready to make a move. Now this morning in the E-minis. Trap traders again down here, right? And people say, how can you tell? Well, I got aggressive selling, at the low of the bar, and the bar's trading higher, right? That's an easy sign of trap traders, right? And it's just one of those things that you see that happen. Okay, yeah, I could just get long. I could take a nice quick scalp up here. Now there's other things that the order flow trader software can do for you, right? It could show you strong aggressive selling taking place. That's this red area, that's this red area, that's this red area, just as if there's strong aggressive buying taking place. That's this green area, this green area. Okay. So there's ways of analyzing the order flow that you just can't see on a normal bar chart, right? Here's your normal gold chart. This is this morning, right? This is the chart I showed you at the very beginning. That big run up came off a little bit, made that new high, and then fell over, right? This is a move, from the 20s down into the teens. I don't know where we're trading it right now. I think right now we're trading somewhere around, below 10. I think we're around 08 or something like that. But wouldn't you like to know, if you're looking at this chart, when it's trading up in here, that there's something bearish in the order flow? Well, yeah, that's why you use an order flow chart. So this is your normal footprint chart that most traders will use, right? And it'll give you your buying and selling imbalances. It'll give you your point of control. It'll give you your delta. And up here you can see, yeah, you got a divergence, right? You got a new high, you got negative delta. That's what a divergence is. Um, my Orderflows trader software will actually print what are called the order flow ratios, which will tell you if it's bullish or bearish. And this is bearish order flow, right? I know that because the blue number up here, it tells me it's bearish. If it was a black number, it would just be normal order flow. So it's a red candle with bearish order flow on the top. At the high of the day, you got a divergence. So obviously you got negative delta, right? What do you think this market's going to be doing? It's going to be looking to start moving down. It's not going to keep going up. And there's even other little tools that we've developed that will show you things like, it'll draw down arrows if it's bearish or up arrows if it's bullish. Now, again, looking at the value areas, right? This is a very bearish value area. That's why we draw it red color, right? To tell you, just to highlight to you, hey, what? This order flow is very bearish up here at the high of the day. And you're up here at the high of the day and you see this bearish order flow come in. You don't need to wait until it starts selling off, right? The area to be getting short is right here. Market does sell off, comes right back up to that area where you'd gotten short anyway, right? Rather than, if you draw your trend line, you draw it up here, people say, oh, look at this nice, beautiful trend line here, right? And it is, it's a nice trend line, right? You draw it from this point to this point to this point, and it breaks here, okay? Comes back up, maybe, the trend line was still going up here. You're getting short somewhere in here, 1820. Again, where would you rather get short? 1818 or 1824, right? Well, yeah, I'd much rather get short up here at 24 than at 18, right? You're just giving up all that stuff by waiting for confirmation when you got your confirmation already that is bearish up in here at the high. Right? You're not waiting for the market to fall apart to pieces. You're getting short right now based off of what you're seeing in the footprint right here at this high. Bunch of selling imbalances. You got a bearish value area. Obviously, you got the negative delta. You got the negative order flow. You got everything going for you. You got like 5 things in the order flow going for it. Market sells off a little bit, comes back up. More bearish information in the order flow. That's why there's that. You can just see the deltas are all negative here. And again, it's just those are those things that just stand out. Now, another thing I want to talk about is the delta footprint, right? The delta footprint is basically a footprint based on the delta at a price in the bar. It's a horizontal. It's not in the two-way auction. Whereas, the footprints I was showing you before take into account all the volume that trades on the bid and the offer. The delta footprint takes it a step further. It looks at just the delta at price. So, for example, this bar here, it's got 2, right? It's got a positive 2. So it's telling you there's 2 more aggressive buying than selling at this price level. Now, where this gets useful is you're going to see some bars like this, all negative delta, a red bar. So it's just telling you this bar opened up and it was just net aggressive selling at each price level, right? Because oftentimes what you're going to see in a bar is you're going to see volume go back and forth, right? Volume traded on the bid, volume traded on the offer. Then you're going to get these bars where it's just all aggressive buying at each price level. Positive delta, positive delta, positive delta. Right? What do you think this market is going to do? It's going to give you some nice scalping opportunities in the market, right? Euro currency, right? Look at this market sort of dips down here. Aggressive buying comes in, all aggressive buying in this bar. Now this bar had mostly aggressive buying. It's got 2 price levels with some aggressive selling. But these bars like this, right, is telling you, hey, you know what? Aggressive buyers are coming in, not just coming in, but coming in with strength. Again, this is YM. This is a 100 tick chart. I mean, most of the charts I show you are time-based charts. I use time-based. I also look at tick-based and volume-based. You could use order flow on basically any type of chart. Renko charts you can't because you need to use historical data if you want to see the past order flow. It's just one of the limitations of a Renko chart. I mean, there's other limitations as far as back testing, etc. But just Hike and Ashley charts you could use order flow on. But if there was one thing you just looked at on an order flow chart, and you just look at the delta footprint, just look for these bars where it's just all aggressive buying or all aggressive selling, right? Just spend a day looking at them, right? And see how, that can give you some great trading opportunities. Because at the end of the day, right, everybody's looking at the same chart, but not everybody's looking at the same information. So imagine if you had another level of information that nobody else is looking at. I don't say nobody else, I mean, but overwhelming majority of other traders is not paying attention to. All right, what do you think, Daniel? That's where you're going to get your edge. It's from the information, right? That's why, people go to jail over information, right? Insider trading. Insider trading is illegal. This is not insider trading. It's taking the information that's available to everybody and putting it into a format that's easy to read and analyze and make trading decisions from. So remember, the more intricate and complex a trading methodology, the more likely psychological obstacles are going to develop and hinder your trading, right? You want to not be confused when it comes to, oh, should I buy or should I sell? Oh, yeah, you know what? I see this bar, it's all aggressive buying. Should I sell? Well, why the heck would you sell? You should be in buying mode, right? You should be looking to get long, not thinking, well, maybe I should be looking to get short. No, why would you? It's all aggressive buying that just happened, right? Again, the more complex things are, you become confused about the data and you find yourself unable to make decisions. You're going to you're going to think, I just better do nothing, right? And you're going to cost yourself trades. You're going to cost yourself, you might as well not be trading. That inaction may seem like the most rational option. Are you going to do nothing? I'm going to give it some time, let it develop. No, right? That's the problem with things that are too complex. You don't understand them. Simple and obvious is always better than complex and convoluted. Order flow is a simple and obvious way. Trading successfully often requires taking calculated risks and making quick decisions. When on the trading floor, guys didn't have, back in the 90s and even in the early 2000s, right? If guys wanted to look at a chart, they had to step out of the pit, right? They had to go to the side wall and stand in line to use a CQG machine, right, and pull up a chart, right? Then they print it out, then they can draw mark it up however they wanted to back in the pit. But it's not like people were on a phone and pulling up Trading View on their iPhone and and finding these levels. No, they're not using these indicators there on the floor, right? They're reading the order flow, the flow of orders coming into the market, and how the market is accepting or rejecting those price levels. So over the last 45 minutes or so, hopefully you'll agree it's been time well spent. I hope you guys are coming away with some good information. Unfortunately, I can't cover everything in a quick training session like this, right? But I got a special offer so you can get the information that you need, know what to look for in the order flow, and get going, right? So the offer that I got for you involves the Orderflows Trader software. Right now, it runs on NinjaTrader 8. So if you're not using NinjaTrader, you use a footprint on, other platforms. But really, if you're trading futures, at least you can download the free version of NinjaTrader. My software will run on it. You will need, data for it. You will need to subscribe to a data feed. But I do know that I do have customers that have my software on the free version of NinjaTrader. They just pay for the data feed. And then, they trade over some other front end, right? Provided by the broker or, another charting platform. And basically what Orderflows Trader is, it's like plugging a computer to my brain, right? My vast knowledge of order flow analysis, so to speak, and put it into a program so you can see what institutional traders are doing in the market. But I do realize that having order flow software is one thing. You still got to know how to use it. So I don't just give you software and say, hey, thanks, for buying it. I'll see you on the other side. No, I provide a lot of further education because that's really what you want, right? You don't want just software, not know how to use it. I buy software all the time, not just trading software, but all other types of software. And I get frustrated because I can't figure out how to use it, because a lot of times the documentation sucks, and you can't get any help on just getting it set up the way you see something online like, oh, this software is going to change your life. You can do this, 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 and then you put it on and you can't figure out how to use it. Like these graphic softwares, I'm not computer illiterate, but trying to get me to use things like Photoshop is very difficult. And it shouldn't be that way also with trading software. Because at the end of the day, right, you got to know what to look for in the order flow. So I'm going to give you access to the order flow trading course. And I sell this on my website, $297. I sell it every day. People will, have another software, but they need the education on know how to use it. I'm going to give you this for free when you get my software, but also give you access to my Inner Circle video series. And what that consists of, there's 56 videos on there of advanced order flow tips and analysis, different ways to look at the market that you probably never thought of before. So the software, normally I sell it for $8.99. The training, the Order Flows trading course, $297. The Inner Circle video series is just about $500. So it's almost $1,600, $1,700. Now I do realize that that's a lot of money to invest for some people. Okay, but again, I got a special offer. You're not going to pay that. And when you make an investment in software like that, right, you want some access to me and questions you may have. So what I do every week for the last 3 years, I do take time off for holidays, or sometimes an emergency comes up. But actually, this site says 157. There's actually over 170 episodes. It's one thing to learn from books and videos. What you want is some, real-time interaction. And so I do a live training session every Tuesday night where you can ask your questions, any question on trading or the software. Mike, I'm having a problem, installing the software, or Mike, this, can you help me out? Or Mike, I saw this in the market. What do you think of it? People send me their charts. I go over it, right? And I'm there every week, so except for like Christmas and 4th of July, I'm not having one on Tuesday, but I'm there. It's a place where you can find me for sure. Tuesday nights, 7 to 8 p.m. Central Time. And it's free to all users, right? You can see here, I haven't posted the other days, but it's 170 as of June 21st, 2020. It's actually 171 as of the 28th, but I just haven't had a chance to put it up yet. But you're going to get access to those replays in case you miss it. And some people charge you extra to answer your questions, have interaction like this. Oh yeah, you buy my software, then I'll sell you on a trading room. For what? That should be included with it, right? Some people charge a couple $100 for that. Now, what I discussed today is just some of the forms of analysis that I talk about weekly in those weekly sessions, because I do go over interesting things in the order flow that you might find useful, in your analysis. So to get started, all you got to do is go to orderflows.com/oft5.html, oft5, orderflowstrader5.html. Very simple. Scroll down page. It's going to take you to, there's some videos and some more instruction about the software, but to get started, just click this button, right? And it's only $749, right? It's not $1,800, $1,700. It's only a one-time payment of $749. And it's processed through PayPal, right? Everybody's got a PayPal account. Everyone should be familiar with what PayPal is. You just go through there. Now, bear in mind, it does take some time to generate your usernames, your licenses, because again, I'm giving you access to several courses. So just give it, a little bit of time. Usually it gets out to you pretty quick within an hour or so, but I do say give it a couple hours maximum. And it goes to your email that was used in PayPal when you made the payment, right? Sometimes people have PayPal accounts, they don't realize that their email has changed. So, if your email has changed, please check your previous email. And it's just a one-time payment of $749, right? And you get all that you get all that stuff. And as a special bonus for you guys from Investors Expo, get this order flow playbook. right? It's $297. Normally I sell it again. Actually, I don't really sell it anymore because it's I do trainings and I offer them to people. Then I sort of put them on the back burner, right? I lock them back up in the vault, and maybe once a year, twice a year, I'll make it available again for a limited time, right? Because I want to teach you how to read the order flow, but at the same time, I want you to apply it to the trading. So get started now. Go to orderflows.com/oft5.html. There's no monthly recurring charges you have to pay me. I hate that software that you got to keep paying for the rest of your life. Cancel your credit card, they just start taking the money out of your bank. No, it's just a one-time payment. Now, again, you do have to pay your data fees, right? That is a monthly charge. If you need data to run any sort of, if you're trading, you need data. That's a given. And your NinjaTrader fees, whatever those are, if you're using NinjaTrader, right? If you have a paid version, okay, great. Some people will like to lease the version. But again, you could run on the free version of NinjaTrader as well. You still need a data feed though. So what you're going to get is you're going to get the Orderflows Trader 5.0, which is our current version, valued at $899. You can get access to the Orderflow Trading course, which is $297. The Inner Circle video series, which is $497. The Orderflow Live weekly group training access to. I don't want to put a price on that, but I know people charge several $100s a month for that. You get access to that for as long as you have the software, right? And there are people that attend those that have been using my software for as longer than I've actually been doing the training, the weekly group training. And you get access to the order flow playbook. And in that playbook, you're going to learn, I think it's 10, maybe 11 great order flow trade setups that you can take advantage of. And again, the reason why I provide all the trading course, the Inner Circle video series, the playbook, and even the weekly group training, because I want you to understand what to look for in the order flow. Right? A lot of people buy a footprint chart, buy order flow software, and don't know what to look for. You're not going to sit in front of the screen and just figure it out overnight. Maybe over time you could figure it out, but why spend all that time? Why not just jump to the front of the queue by learning what to look for rather than trying to figure it out all on your own? And it's just a one-time payment of $749. All right, so just get started. Go to orderflows.com/oft. I'll put it in the chat here for you. Okay. Now, again, I didn't mention it at the beginning, but for some of you guys that want to learn more about order flow, I did write a book on trading order flow. Right? You're not going to get the hard copy. It's just a digital download. Just go to orderflows.com/book.html. Enter your name and email address. Click submit, and it'll take you to a page where you can download the book. Okay, so just go to orderflows.com/book.html. You got to put the .html on there to get the book. All right, so again, you got to get started. Right, go to orderflows.com/oft5.html. And in the end, right, we regret the chances we didn't take. Just last night, I was talking to my sister-in-law and her sister. She's already pushing 50, got no kids, and now she's regretting it. Right? Like, oh, you know what? Maybe I should have had kids. But she's at the point now; it's too late. And I see that a lot with people wanting to get into trading. Yeah, I want to trade. I want to learn how to trade, but then they never do anything. Okay, they'll email me, message, I'll give them a list of books to read. And then a year later, I hear back from them. Oh yeah, I'm still interested. Did you read those books? No. You got to get started at some point, right? So go to orderflows.com/oft5. I'm going to take a couple questions here. What time frame are you talking? Now, again, when you're looking at order flow, it's really meant for day trading. Okay, it's meant for people that are going to be trading in and out during the day, not holding the position. Not It's not really meant for swing trading. There are people that do, but their knowledge of order flow is a bit more advanced, right? They understand a lot of things and looking for very specific nuances. But I talk about that in the weekly sessions as well sometimes. Things on a bit longer time frames. Yeah, there'll be a replay. And the last question here: how much is the data fee on NinjaTrader? Well, okay, what you can do is you can get data from different sources, right? You can get it from the broker, or you could pay, a third party like IQ Feed or Kinetic. But the real-time data fees are keep going up. And if you were to get, say, a real-time data feed for just CME, just like all their contracts, it's like $100 or something. But what people do is they open a trading account at NinjaTrader and just fund it with, you know, 250 bucks, 300 bucks. Because, you could trade these micro contracts. The margins are only $50. So you could basically keep, a minimum amount in your trading account and subscribe to the data feed through them. And you're going to be paying a very low fee, right? Your fee is only going to be like, I think I pay around $60 a month for CME, CBOT, NYMEX, Eurex, level 1 and level 2. I do have level 2 because I do look at, the depth of the market in the order book when I'm trading. But, that's how people are able to get a lower um, data fee, right? Because honestly, $60 a month for real time data is very inexpensive. So, and it's okay. It's one thing to, again, have a data feed, right? But you also it's got to be a trading feed as well, because it's not just one way, right? Where it's just coming from the exchange to you, right? If you're trading, it needs to be two-way. So it needs to plot on your chart and be able to send the order through that as well. So again, I hope that answers, everybody's questions there. So again, to get started, just go to orderflows.com/oft5.html. And, again, at some point, right, if you want to be a trader, you got to start trading. And it's a great way to analyze the markets. Order flow really gets you as close to the markets as possible, right? It's basically you're seeing and understanding the buying and selling that's going on. Rob asks, does level 2 help you? It's moving so fast. When I look at level 2, I don't, yeah, it does move super fast. I mean, it's especially nowadays, maybe 10 years ago is much slower and you could just sort of, drink your coffee as you're watching level 2, but now forget about it. It jumps all over the place. I use level 2 because I do look at things like the market depth map, right? NinjaTrader has that on their paid version. Just get an idea, if there's big resting orders someplace. Okay, because that does matter, right? Because say you're in a trade and you have a target level, but if you're looking at the resting liquidity in the order book, and there's, say you're long from 27 and you got a target at 45, say, but at 37, 38, 39, you see big heavy orders really stacked. I mean, like thousands of contracts in the E-minis or something. Okay, maybe 45 is not realistic, right? And as it gets closer, then you can start reassessing. But that's how I use level 2. I do have Thinkorswim. Mauricio asks, I have Thinkorswim. I don't have Ninja account. What do you recommend to do? Um, well, like I just sort of explained it there. I mean, if you want to use the software, just you could run it on the free version of NinjaTrader. You will need obviously a data feed for it, and you could execute over TOS, which is I have people that do that. Again, you can get the data feed through NinjaTrader brokerage. When you sign up for NinjaTrader, they'll give you like free 2 weeks anyway of data. But again, rather than paying for this real time, because the data feed from them, it's a CQG continuum feed, which is very reliable. I got it running almost 24 hours a day, 6 days a week on my system. So anyway, guys, I'll leave it there. I've gone over an hour, so I don't want to keep you guys on too long. It's end of the month, so we'll see what happens going into the cash close. So thanks everyone for taking that time out of your day. I appreciate it. and I hope to see you guys on the inside. Thank you. Bye bye.